Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world so you don't have to, because sometimes the truth is hidden in plain sight, and honestly, who has time to read all those dense filings anyway? Get ready because we're diving into Barrick Mining Corp's latest report. This is Barrick Mining Corp, the company that digs up gold and copper, and today we're dissecting their Q2 report for 2025. Think of it as their mid-year checkup. They're using Form 6K, which is basically a heads up for us on what's happening with foreign companies. The main event here is their Q2 report. So let's get straight to the good stuff, the actual numbers. First off, we see a big number, 1.7 billion. This likely represents something significant like total revenue or assets, and it sets the stage for how big this company is playing. And it's all in US dollars, the global standard for big business. Now let's look at how they're funded. They've got issued capital, which is like the money shareholders put in. For the period ending June 30, 2025, this was a certain amount, and we can compare that to previous periods. Looking at the numbers for June 30, 2024, we can see if that issued capital has grown or shrunk. When we compare this to December 31, 2024, and then go back to December 31, 2023, we can really start to see the trend. Are they bringing in more investment, or is the shareholder base changing? Then there are retained earnings. This is the money the company has made over time and kept, not paid out as dividends. Seeing how this changes from December 2023 through June 2025 tells us if they're successfully growing their profits and reinvesting in the business. Accumulated other comprehensive income can be a bit of a wild card. It includes things like currency exchange differences that aren't directly from operations. Watching this piece of the puzzle helps us understand how global markets are affecting their overall financial picture beyond just their day-to-day sales. All these pieces together form the equity attributable to the owners, essentially the company's net worth. Tracking this from December 2023 to June 2025 gives us a clearer view of the company's total value and its growth trajectory. It's the bottom line of their ownership stake. They also report non-controlling interests. This is the part of the company's equity that belongs to other people or entities who aren't the main owners. It's important to see if this is growing or shrinking, as it can indicate changes in subsidiaries or joint ventures. Let's pivot to some specific operations. We see mentions of Donlin. This is a significant project for any mining company, and noting the dates associated with it, like April 22, 2025, and then June 30, 2025, gives us a timeline of their progress or potential changes there. There's also a reference to prior to closing member and within 18 months from closing member related to Donlin, with specific dates in April, May, and June of 2025. This suggests there were important milestones and deadlines happening with this project during this period, perhaps related to acquisitions or development phases. It hints at active deal making or operational shifts. Now, Barrick breaks down its performance by operating segments, which is super helpful. We're looking at Q2 2025 compared to Q2 2024, and also the first half of 2024 for various mines. Take Carlin, Cortez, Turquoise Ridge, Pueblo Viejo, Lulagoncoto, Kibali, Lumwana, North Mara, and Bulyanhulu. For each of these, they're showing us how they performed in the second quarter and the first half of the year, both for 2025 and 2024. This lets us see which mines are stepping up and which might be facing challenges. The Nevada Gold Mines operation, a big deal for them, shows performance across Q2 and the first half of both 2025 and 2024. Comparing these year-over-year figures is like looking at a report card for their American operations. Similarly, the North Mara and Bulyanhulu mines in Tanzania are also laid out for us for the same periods. This side-by-side comparison is crucial for spotting trends. Is revenue from these specific areas growing as they hoped, or are costs eating into profits? And then there's Tongon, another key mine with its performance data presented in the same comparative way. Each of these segments is a cog in the larger machine, and their individual health really impacts the overall company. We also see unallocated amounts for these periods. These are typically costs or revenues that can't be directly tied to a specific mine or segment, like corporate overhead. Seeing how these change can tell us if the company's central operations are becoming more or less efficient. And then there's the reportable segments member. This is essentially the sum of all their major operating units. The numbers here should reflect the combined performance of all those mines we just talked about. Material reconciling items are adjustments needed to get from segment performance to the overall company figures. Understanding these helps us see where the differences are coming from, perhaps one-off expenses or income items. For example, here with Kibali, we see these reconciling items. It's important to check if these are one-time things or something that will keep happening. And the segment total member gives us the overall picture of what their mines are generating. When we look at how they're performing by product, we see data for spot market gold, gold concentrate, and gold provisional pricing adjustments for Q2 and the first half of both 2025 and 2024. This is where the rubber meets the road for their gold business. Spot market gold is pretty straightforward. It's about the immediate price of gold. Gold concentrate is gold that's been partially processed. Provisional pricing adjustments mean they sell gold at an estimated price and then later adjust it based on the final market price, which can lead to surprises. Tracking these components shows us how volatile the gold market is impacting them. The gold member figures usually aggregate all gold related activities, giving us the big picture for their most famous product. They also detail their copper business with copper concentrate, copper provisional pricing adjustments, and copper member performance for the same periods. Just like with gold, the provisional pricing for copper introduces some uncertainty that they have to manage, and other products covers anything else they might be mining or selling, rounding out their revenue streams. On the asset side, non-current assets are things like mines, equipment, and long-term investments. Seeing how these figures evolve from June 2025 back to December 2023 helps us understand if they're investing in new assets or if the value of their existing ones is changing. There's also mention of domains like Lulo-Gomkoto in Argentina, Tanzania, Saudi Arabia, and United States. These likely represent regional operational groupings or maybe areas of strategic focus. In the United States and Peru domain, these groupings give us insight into their geographic strategy and how they manage operations across different continents. We see specific mentions of Kibali, Jabal Sayed, Zaldivar, and Porgera, along with other JV member and joint ventures member data for December 2023, 2024, and for the first half of 2020, 2024, and for the first half of 2025. This is key for understanding their exposure to joint ventures where they share ownership and risk with other companies. How these JVs are performing directly impacts Barrick's books. Now let's talk about fair value. This is how they value certain assets and liabilities. Level 1 fair value uses quoted prices in active markets, so it's pretty reliable. Level 2 fair value uses observable inputs, but maybe not direct quotes like prices for similar assets. Level 3 fair value is the trickiest, relying on unobservable inputs, meaning management has to make more estimates. This is where there's more subjectivity and potential for variance. We see this fair value hierarchy applied to things like other investments, receivables from provisional copper and gold sales, and even investment in Lulo-Gomkoto. By looking at how these are valued, especially under level 3, we can gauge the level of estimation involved and potentially the risk associated with these assets. Then we look at other assets with the distinction between those not measured at fair value in statement of financial position, but for which fair value is disclosed, and those at fair value. This is important because it separates assets that are shown at their book value versus those whose current market value is reported, giving us a fuller picture of asset valuation. Total debt is another critical number. They show this for both categories of fair value measurement. How much debt they have and how they value it impacts their financial risk. Other liabilities, other is similar, showing their obligations. Again, the distinction on fair value reporting is key. Ordinary shares member under issued capital member shows us the breakdown of their common stock, a fundamental part of their ownership structure. We also see specific subsidiaries like Nevada Gold Mines, Pueblo Viejo, Tanzania Mines, which likely includes North Mara and Biharamulo, Lulo-Gomkoto, Tongon, and Reko Diq alongside other subsidiaries member and subsidiaries member and subsidiaries member totals. These are presented for December 2023, 2024, and the first half of 2025. This gives us a view of how their entire portfolio of mines is contributing and if certain regions are becoming more or less important to them. For example, comparing Nevada Gold Mines' performance in the first half of 2025 to the first half of 2024 is direct insight into that massive operation. And to see Lulo-Gomkoto also broken down for these periods is vital for understanding their African operations. They include sensitivity analysis, like the impact of an increasing gold price of hundreds or a decrease in WIC of one member. These are hypothetical scenarios that show how changes in market conditions or their cost of capital would affect their financial results. It's a way to show they're thinking about risks and how sensitive their business is to external factors. Finally, under legal proceedings contingent liability member, we find mentions of Parilla complaint, Lulo-Gounkoto mining convention negotiations, and Pueblo Viejo Amparo actions. These are disclosed potential liabilities or ongoing legal matters that could impact the company. Keeping an eye on these is crucial, as legal battles can be costly and unpredictable. The Pueblo Viejo Amparo actions are flagged with dates in August 2025, suggesting recent or ongoing developments. So looking at Barrick's Q2 2025 report, what's the story? Well, they're showcasing a lot of segmented data, which is great for transparency, allowing us to see how each mine is performing. The year-over-year comparisons for Q2 and the first half of the year are pretty standard for a company like this, revealing where growth is happening and where it's not. They seem to be actively managing joint ventures and making strategic decisions, indicated by the timeline around the Donlin project and the different operating domains they mention. The fair value disclosures, especially in level 3, do suggest that some of their asset valuations involve considerable estimation, which is a point of attention for any investor. What I like is that they are breaking down results by mine, giving us a granular view. The comparisons between 2024 and 2025 for segments like Nevada Gold Mines and Lulo-Gounkoto are the real meat of this report, showing us the operational pulse of the company. However, the sensitivity analyses for gold price changes and WAC, while informative, highlight how much their fortunes can be tied to market fluctuations and borrowing costs. This isn't unique to Barrick, it's the nature of the metals business. The legal proceedings, especially the Pueblo Viejo Amparo actions, are potential risks that investors need to monitor closely, as they could represent future financial hits or operational disruptions. In conclusion, Barrick appears to be navigating a complex global mining environment. They are diversifying their operations across multiple continents and commodities, which is a sensible strategy to mitigate risk. The key for them, and for us watching them, will be to see if they can consistently translate their operational efforts into profitable growth, especially managing the volatility inherent in commodity prices and keeping a tight lid on costs. The company is clearly putting its eggs in a few very large baskets, so the success of key projects like Donlin and the ongoing performance of their major mines will be critical indicators of their future success. Of key projects like Donlin and the ongoing performance of their major mines will be critical indicators of their future success. Alright, that's our breakdown of Barrick's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.